Most beginners use RSI the wrong way. They wait for RSI to cross above 30 or below 70 and try to catch a reversal. But in a strong trend, RSI can stay overbought or oversold for a long time, and that's why many of those trades fail. So instead of fighting the trend, what if you could use RSI to trade with the trend? In this video, I show you a very simple RSI pullback strategy using only two moving averages and RSI. By the end, you'll know how to find the trend, wait for the pullback, and time your entry much more precisely. So let's get started. Understanding the idea behind the strategy. Before we get into the rules, let's understand the main idea behind this strategy. Markets don't move in straight lines. Even in a strong trend, price moves in waves. It pushes, pulls back, and then continues. And that pullback is important because in a healthy trend, those pullbacks can create great trading opportunities. But here's the problem. When price starts pulling back, many traders think the trade is over. They exit too early, or even worse, they trade against the trend. So the real question is, how do we know if this is only a temporary pullback or the start of a real reversal? That's exactly where RSI helps us. Setting up the indicators. Let's start by setting up the indicators on the chart. First, add an exponential moving average with a period of 200. In this strategy, we use an exponential moving average instead of a simple moving average because it reacts faster to recent price movements and gives more weight to the latest candles. Then go to the Style tab, change the color to blue and make the line a bit thicker so it's easier to see on the chart, then click OK. We will use the EMA 200 to identify the overall direction of the market. Okay, next add another exponential moving average with a period of 50. Go to the Style tab again, change the color to orange and make the line slightly thicker for better visibility. Then click OK. This EMA 50 will help us identify where pulls back usually happen during a trend. Finally, add the RSI indicator. Open its settings and keep the default length at 14. Then go to the Style tab and make the RSI line yellow and a bit thicker so it's clearly visible. For the up level, set 60 and for the lower level, set 40. Why 60 and 40? This comes from the RSI range shift concept. We have a separate video explaining this in detail, so you can find the link in the description. But in short, in an uptrend, RSI usually moves between 40 and 80, and in a downtrend, it usually moves between 20 and 60. In the next part, I show you how these two levels, 40 and 60, help us time our entries in this strategy. Now our chart is ready, and it has three simple tools. The EMA 200, which shows the overall trend, the EMA 50, which helps us identify pullback areas, and the RSI, which helps us spot when momentum is returning and gives us a trigger to enter the trend. Finding the trend. The first step in this strategy is to identify the trend. Look at where the price is relative to the EMA 200. If price is above the EMA 200, the market is in an uptrend. If price is below the EMA 200, the market is in a downtrend. This simple filter helps beginners avoid one of the biggest mistakes in trading, taking trades against the main trend. In this strategy, we only trade with the trend. So when price is above the EMA 200, we'll look only for buy setups. And when price is below the EMA 200, we'll look only for sell setups. Waiting for the pullback. Once we identify the trend, the next step is to wait for a pullback. If the market is in an uptrend, that means price is above the EMA 200. But we don't want to buy after price has already moved too far up, because that usually means a late entry. Instead, we wait for price to pull back. Very often, in an uptrend, price retraces toward the EMA 50 before continuing higher. That area around the EMA 50 can act as a temporary support where buyers may step in again. So, in an uptrend, we wait for price to move back toward the EMA 50. The same idea works in reverse for a downtrend. If the market is in a downtrend, price is below the EMA 200. But we don't want to sell after price has already dropped too far because that can also lead to a late entry. Instead, we wait for a pullback upward. In many downtrends, price rallies back toward the EMA 50 before moving lower again. That area around the EMA 50 can act as a temporary resistance where sellers may step in again. So, in a downtrend, we wait for price to move back toward the EMA 50. Using RSI for timing. Now comes the role of RSI. During a pullback in an uptrend, momentum becomes weaker. Because of this, the RSI usually starts moving downward. Very often, it drops toward the level around 40. It does not mean the trend is over. It simply means the market is taking a short break. When buyers return to the market, RSI starts moving upward again. That moment, when RSI turns up from around the 40 level, can signal that the pullback is ending. This is our trigger to enter a buy trade. Now let's look at the same idea in a downtrend. During a pullback in a downtrend, momentum becomes weaker. Because of this, the RSI usually starts moving upward. Very often, it rises toward the 60 level. Again, this does not mean the trend is over. It simply means the market is taking a short break. When sellers return to the market, RSI starts moving downward again. That moment, when RSI turns down from around the 60 level, can signal that the pullback is ending. This is our trigger to enter a sell trade. So, remember, we are not trading just because RSI touches 40 or 60. We wait for RSI to turn back in the direction of the trend. Now let's see how these three elements work together on the chart. Buy setup, real market example. For a buy trade, first price needs to be above the EMA 200. This tells us the market is on an uptrend. Next, we wait for a pullback toward the EMA 50. In fact, we wait for a pullback instead of chasing the market. Now look at the RSI. During the pullback, RSI drops near the 40 level. This shows temporary weakness, not a trend reversal. When RSI starts turning back up from around 40, this is our first signal for a possible buy trade. For more confirmation, we wait for a bullish candle to close back above the EMA 50. At that point, we enter a buy trade. We place the stop loss below the most recent swing low, and for the take profit, we target at least 1.5 times the stop loss distance. This gives us a minimum 1 to 1.5 risk to reward ratio. Now look at what happens next. After entering the trade, price continues moving higher and eventually hits our target. And remember, in this strategy, the goal is not to catch the entire trend from bottom to top. The goal is to capture the healthy continuation move inside the trend. That's where consistency comes from. Sell setup, real market example. For a sell trade, price first needs to be below the EMA 200. This tells us the market is on a downtrend. Then we wait for the price to pull back toward the EMA 50. We don't jump into the trade after a big move. We let the market come back to us. Now let's check the RSI. During the pullback, RSI moves up toward the 60 level. This usually represents temporary strength inside the downtrend. Then RSI starts turning downward from around 60. This tells us the pullback may be ending. For additional confirmation, we wait for a bearish candle to close back below the EMA 50. Once that happens, we open a sell trade. The stop loss goes above the most recent swing high. And for the take profit, again, we aim for at least 1.5 times the size of our stop loss. And now watch what happens next. After the entry, price starts moving lower and eventually reaches our target. So that's the full strategy. First, identify the trend using the EMA 200, then wait for a pullback to the EMA 50, and finally, use the RSI to help time your entry. Simple rules, clear structure, and most importantly, patience. If you found this lesson helpful, like and subscribe for more practical strategies. Comment below if you want a tutorial on a specific topic. I'll make it for you. Thanks for watching, and I see you in the next video.